Good afternoon. Currency, it's the largest and most liquid market in the world. I'm Brigid Taylor and this is Currency Wars. Let's have a look at what happened in the week behind us. Right, after trading 11.90 last week, the rand is weaker and it's traded above the 12 level, hovering between sort of 12.05 and 12.10. It remains, however, one of the weaker emerging market currencies globally amidst the dollar weakness. The dollar has come under pressure following last week's GDP disappointment, as well as yesterday's weaker than expected ADP employment data. Both these numbers confirmed the slower expected first half growth. As the dollar's dropped, so have the treasuries. The US 10-year note has pushed to closest to its highest levels of the year, and the consensus trades for the year thus far have been to be long bonds and long dollars, but that seems to be gradually unwinding. Meanwhile, in the euro, the eurozone is much stronger, and we've seen a euro that is steadily recovering on the back of the growth and inflation expectations. The euro is now trading at 1.13 to the dollar, as the US remains on the back foot. The UK elections are in focus this week, with the hung parliament that's expected, and this will place pressure on the pound, in all likeliness, as the politicians battle for supremacy. Right, now that we know the lay of the land, we're going to go over to our guests and get their views to where we see the dollar and certainly against the cross rates for the remainder of this week. So I'd like to welcome both of you today, John Cairns from RMB and Andre from Treasury One. Welcome. So it's an interesting scenario. We're sitting in this conundrum. You mentioned offset earlier that it's a bond move. So just talk us through how you view the rand weakness as well as seeing dollar weakness as a fundamental resulting from global flows that have resulted in this bond movement.
Yeah, Brett, your intro it was quite good. You touched on the two key themes we're seeing in global markets. The first is this very aggressive selling off in government bonds around the world. And the second is the sharp upward move in euro-dollar. So just quickly on the first theme, it's led by German Bund yields. Yeah. I mean, the numbers there that you're talking about are quite incredible. German 10-year Bund was 0.05% 2 weeks ago. It's now at over 0.6, going towards 0.7. Very aggressive. Secondly is that euro-dollar, as we know, we've been talking about it for the past year, this continued downward slide in euro-dollar. It's now pumped up through 110, 112. It's keep going to the upside. So the rand is caught between these two pressures. What I think it means is that the dollar weakness has held back dollar rand, but because of Germans bunds pushing up and euro-dollar moving, euro-rand has really pushed up right to that 13.70
So we've got that
level.
double whammy. I mean, we've got on the back foot of the US, we would have expected to see rand a lot stronger, and we're not seeing that. So that's the one side of the equation, as well as the fact that we've seen the euro strengthen. I mean, it was trading 107 just 2 weeks ago. So that double whammy obviously resulted in those cross rates reflecting quite aggressively that upside move. Do you not think, though, that that is a reflection of what's happening fundamentally in the rand, or do you think this is purely a bond move? Because the interesting scenario is that we're not in fact seeing a hell of a lot of foreigners selling our bonds. So you would expect that the dollars would remain on shore. Yeah,
I know, Andre, I'd like to get your opinion on this as well. But to me, it's yield off, risk off, treasuries, bond pushing higher. It's the search for yield is unwinding, and of course the rand's going to weaken. All the high yielding currencies are weakening. Now, and Andre had a good point earlier about the trade data in the US, which I thought was quite important. Andre.
Yeah, the trade data that came out in the US on Thursday is interesting. That if you go back to 1987, October 87, the trade figures in America came out, and that caused a huge sell-off in equity markets. But I think what one can really emphasize there is it changed portfolio flows. And I think if you look at what happened up to Thursday afternoon, GDP numbers came out on Wednesday, Thursday afternoon trade figures came out, and from there onwards, there's been a realignment, and we see this massive change in yields and a chase for yields and the movement of yields in all over the world. And I think that's a realignment of portfolio flows. And I think people are steadily and surely looking at, instead of just looking at non-farm payroll data coming out every now and then and we change our views on that, they're looking at more of a global figure that represents your economies.
Actual trade flows.
Actual trade flows.
That's
that
an interesting point.
Your economies.
I think the key issue we're facing in the currency market at the moment is whether that euro-dollar trend, is this a trend that's now reversing? Is it just a temporary bounce, and that trend is going to resume pushing us back to parity.
Well, if you look at our statistics, and certainly if you look at analysts' views for where we think we're going to go in the future, I mean, everybody's still of the mindset that the Fed is going to hike. It's now just being pushed down the line. So if the Fed does in fact hike, then the consensus is to see euro back at par, if not lower, right? So right now we're seeing the euro come back. Why? Because we've got all this negative data. And as Andre mentioned, with the trade numbers that have come out, the impetus is now being placed on how management or how trade flows are working. But that's another issue that pertains to South Africa. So if we look at the South African trade data, we're in the same boat. And I mean, especially with the weaker rand.
We're in the same boat, but John made a very good point. If you look at the euro, is this a change in trend? Or is just a temporary thing? If you look at other data out of the Eurozone, you look at Greece, you look at political parties gaining momentum and winning and increasing against euro unity, etc., etc.
Yeah, those should speak to negative euro.
Then that speaks to negative euro. So I don't think, and I agree with John, is this a change in trend or is it temporary? I think it's temporary. It's change in portfolio flows. It's temporary. Long term, I think the euro is still in trouble. And
but Andre, what about your trade data? Wasn't that the big story of the US trade data? That it's starting to show the strong dollar is now really negatively impacting on the US. So it's almost like it's reaching a limit, maybe, the strength of the dollar.
It's reaching a limit, but we've said 2 weeks ago that the downward move of the euro will not necessarily stop, but it will go up, there will be a correction, and then from there, it will be a far more gradual decline than what we have seen in the last couple of months. And I would stick to that. I think that is what we still see.
But then, guys, if that's correct, so, okay, this is the big issue we've got to debate. But if you're correct, then this pop in euro rand gives a great opportunity for exporters to Europe to hop in.
Absolutely.
Because if euro's going to keep sliding. Remember, it went from 15.30 all the way down. This is only the second correction we've had in that trend. I mean, to hop in now would be great for euro exporters.
If you look at that, I agree with you 100%. And if you look at the forward points that you still add to that, that on export side is your favor, then you end up with really lucrative rates, a lot better than what you have seen in the last 6 months. So certainly it's an opportunity for the exporters to
okay, so we're going to pull out the big guns now and let's look at those actual levels. So, you know, just in short, just to kind of summarize, we're saying that this move in the dollar, unwinding of those long dollar positions, unwinding of those long, certainly the treasury positions as we're seeing across the globe, is potentially like a period of respite as markets reassess their short-term investment opportunities, but the longer-term trend still remains intact. So I'm going to hand over to you now, but we're going to just have a quick sting and then we're going to move into big guns. Right, so Andre, I'm actually going to ask you to start today. Give us your view. I know the pound's a tough one just because of all the elections, etc. But the interesting one for us really is going to be around the euro rand. And talk to us then also on the back of the dollar rand, because that has been a fundamental mover in terms of that move that we've seen in that cross currency.
Euro rand, I think we're at the upper end. I would sort of on the up end, total top, say I call it for 1380, but look for a move downwards back to the 1340. I know that's a wide trading range, but we have seen huge volatility.
So the top side?
1380,
okay.
But rather move down to the 1340, 1335 levels. The pound, I would call 1830, so at the top where we are now, most probably back down towards 1780. I'm concerned about the dollar rand for a sell-off there, and would call the 1205 towards the 1240 level.
Okay, so weak on dollar rand, yes.
So my views are more or less aligned. I'd probably start getting in, if I'm an exporter, I'd start getting in on euro rand already. I'd probably be looking at the collars more than the forwards. I think the optionality is very good. Sterling rand, we face potential huge volatility over the next few days. If you either side an importer or exporter, I'd just look for dips or spikes to get in. There's going to be opportunities on both sides. Dollar rand, I'm with Andre. I'm worried about that. There's going to be a move to the top side. You know, with the continued sell-off in bonds, I think importers need to be very careful to leave themselves exposed. I'd really advise some protection at these levels.
Okay, so thanks very much, guys. And just in conclusion, just to give you a broad strategy, looking for weaker levels, specifically if you're an importer, that's across both the euro rand as well as the dollar rand. Looking for base on the dollar rand around that 12.05 level. However, we could overshoot and go right up to about 12.40. So as an exporter, the market is in your favor currently. Euro rand as well, looking for as high as 13.80. So down to that 13.40 level. However, if you're an exporter, look to take advantage up at those sort of levels, because we are expecting some form of volatility on the back of what's happening in the rand. And then on the pound, it really hinges around the elections. So watch those volatile moves and take advantage of the tops and bottoms, because it is a tough one to call right now. However, if you'd like to send us any questions or comments, you are more than welcome to do so at CNBC Africa, #CurrencyWars410, or to myself at Brigid R. Taylor for your personal response to the FX markets. Thanks very much again, and until next week, good luck in the trenches.